Your bank account is about to be reprogrammed by the state. Starting this year, the Federal Reserve and 130 other central banks are quietly replacing physical cash with programmable digital tokens. This isn't just a tech upgrade, it is a fundamental shift that allows authorities to track, limit, or even expire your spending in real time. The revolution isn't coming from decentralized crypto projects, but from the very institutions you trust to secure your life savings, companies, or volatile assets. This is about government issued money, rewritten in software. It is the most significant evolution of the dollar, the euro, and the yen in over a century. And the last thing I am going to share, it is a feature of this system that governments rarely talk about in public, yet it could be the most powerful tool for economic policy ever invented. Grab a glass of water, get comfortable, and let us get into the mechanics of this. Let us start with the easy win, understanding exactly what this is. A central bank digital currency, or CBDC, is a digital form of a country's sovereign currency. When you hold a physical $10 bill, that is a direct liability of the central bank. When you see a number in your banking app today, you're actually looking at a commercial bank's promise to pay you that money. There is a critical difference between the two. A CBDC creates a direct digital relationship between you and the central bank, bypassing the middleman of your local commercial bank. Imagine if every transaction you made was essentially a cash transaction only at the speed of the internet. In the Bahamas, for example, the Sand Dollar was launched in October 2020. It is the world's first live CBDC. They needed it because the islands are spread out, and sending physical cash between them was a logistical nightmare. A resident in a remote village can now pay for goods with their phone without needing a traditional bank account. It works because it is simple. You do not need to be a tech expert to use it, and it functions just like the digital money you already use, but with the backing of the state directly embedded in the ledger. That is the foundational layer, making money more efficient for the people who need it most. But this is where the plot thickens, so let us level up. Why are over 130 countries, representing 98% of the global economy, currently exploring these digital currencies? It is not just about convenience for rural islands. Look at the PBOC, or the People's Bank of China. They have been running the most ambitious pilot program in history for the digital yuan. By the end of 2023, the digital yuan had been used for over 260 million transactions, with nearly 140 billion yuan in circulation. Think about the scale of that. This allows the central bank to track the movement of money in real time. Right now, if a government wants to stimulate the economy, they might cut interest rates or print more paper money and hope it trickles down through the banking system. It is a blunt instrument. It takes months to see the effect. But with a digital currency, the government could theoretically deploy stimulus directly to the wallets of every citizen instantly. They could even set expiration dates on that money to ensure it is spent within a certain time frame to boost consumption. You see the shift here, right? From passive observers of the economy, the central bank becomes an active participant in how that money is used. It is high impact, high nuance, and it requires a level of infrastructure that is completely invisible to the user, but absolutely transformative for policy. If you are finding this breakdown helpful, hit subscribe. I drop deep dive videos like this every week to help you stay ahead of these massive systemic shifts, because we are not even at the best part yet. All right, remember how I said there was a feature most people ignore? This is the one I have been saving for you. It is the concept of programmable money. Most people look at a CBDC and see a faster debit card, but the real power is in the code. Because the money is digital, it can be programmed with specific logic. Imagine a world where your taxes are deducted automatically the second you get paid with zero paperwork. Imagine a government grant for a small business that only activates if that business meets specific environmental or social criteria verified automatically by the blockchain ledger. This is called smart contract functionality. It eliminates the need for middleman audits, legal checks, and administrative bloat. A report from the IMF, or International Monetary Fund, in 2022 suggested that these systems could slash the cost of financial transfers globally by over 90%. Let that sink in. We are talking about a total restructuring of how value moves. But here is the side of it that makes experts sweat. It also means that the issuer of the money, the government, has the technical capability to monitor every single transaction. There is no more anonymous cash. Every unit of currency has a history, a trail, and a destination that can be audited by an algorithm. In a world where privacy is already disappearing, this is the ultimate final frontier. You gain instant settlement, zero transaction costs, and automated government efficiency, but you lose the one thing that has defined freedom of exchange for centuries: the ability to transact without leaving a digital footprint. Once you see the power of programmable money, you realize this isn't just a new currency. It is a new operating system for society. Think about the implications of that for your personal financial independence. So there you have it. We went from the basic definition of what a digital central bank currency is to the massive logistical shift we see in China and the Bahamas to the wild, programmable future that could automate our entire economy. The transition to CBDCs is likely inevitable, not because it is being forced on us, but because the efficiency gains for the state are simply too large to ignore. The cost of printing, transporting, and securing paper money is a multi-billion-dollar drain on global economies every year. Going digital is the logical conclusion of the internet age, but the trade-off is the loss of financial privacy. We are effectively trading the anonymity of the pocket for the convenience of the cloud. If you got value from this, share it with someone who needs to hear the truth about where our money is headed, and subscribe so you do not miss the next deep dive. I am already working on a video about the intersection of artificial intelligence and automated finance that picks up exactly where this left off. You do not want to miss it. Thanks for watching, and I will see you in the next one.